Good morning, ladies and gentlemen. Welcome to Market Forecast. It's Monday, May 27th, 2014. This is brought to you by Options University, and this is Butch Shorak. Access to this video is for educational and informational purposes only. Nothing contained in this video, website, or promotional material constitutes a promotional recommendation, solicitation, or offer of any particular investment security or transaction. Options University provides educational services that are meant to teach you the risks and rewards of trading stocks and options. We're not a service that tells you what to trade. We're not implying or guaranteeing any profit, and always do not trade with money you cannot afford to lose. Well, with that thought in mind, let's take a look at the last week and see what happened in this booming market. Dow gave us positive numbers for the week, and there we are, year to date, up 0.18%. S&P 500 closed for the first time above 1900 for an all-time high. Week's change certainly was in positive numbers for the year-to-date, up 2.82%. NASDAQ, which led this move up, our tech-laden index, brought us up. Positive numbers also up 0.2% for the year. And finally, the Russell 2000 up 24 points for the week, still in negative numbers for the year, as it is our lagging index, not showing us the strength that the other indexes have shown us. Looking at the coming week, let's see what we have for economic announcements. And as we look at the week, we see that Monday, of course, was Memorial Day. I hope that you all remember those that have gone before us to give us the rights and the privileges that we certainly have today. As we look at Tuesday, we got durable good orders coming out at 8:30. We got the house pricing index coming out at 9 o'clock. Case-Shiller coming out at 9 o'clock. PMI services 9:45. Consumer confidence at 10 o'clock. Richmond Fed manufacturing index coming in at 10 o'clock as Tuesday is loaded. Looking at Wednesday, we see not much of interest taking place on Wednesday after that big loaded Tuesday. Thursday, May 29th, we'll see GDP coming out. We'll see jobless claims coming out at 8:30, which come out every week, and we see pending home sales at 10 o'clock. And finally, on Friday, May 30th, the last day of the month, we see personal income and outlays at 8:30, Chicago PMI 9:45, consumer sentiment at 9:55, and that's it for the day of things of interest that we'll look at as far as economic announcements. These are things that can move the market, and it'll be interesting to see what happens during this short trading week due to our holiday on Monday. Looking at the SPX, we see that our uptrend continues. We see that we got a new high, closed to the new high, closed above 1900 for the first time. Ended up with quite a week, as the only down day of the entire week was on Tuesday, which was the heaviest volume day for the week, as we were a bit below the volume for the previous week. Let's look at this in a bit smaller time frame, and we'll see that we had an up day on Monday, and then we had that Tuesday pullback with volume, which set up the rest of the week, pulled back to that 50-day moving average. Then we saw Wednesday explode, and then closing at 1900 for the week, the highest finish that we've ever had in the S&P. Okay, the S&P certainly leading the way and showing us what markets can do. 500 of the world's biggest and greatest companies represented here gives a true index of what's going on. Let's take a look at the Dow. The 30 stocks that are in the Dow certainly did not reach its previous high, which it had been at a couple weeks ago, but we see that it certainly gives us what looks like a head and shoulder. We'll see whether this continues on up to give us that previous high that we had in the Dow during this coming week. With 4 days trading this week, we have that opportunity to see if the Dow can run a little bit. Futures were up 6 as the market opened on Sunday night, and we'll see what happens as we move forward. NASDAQ had a breakout above this previous high, now sitting at this high right here, and we'll see whether this continues to break up, as the NASDAQ basically led the week up, showing us good strength. Even on Tuesday, we saw not as big a pullback out of the NASDAQ as we did out of the senior S&P index. Looking at the Russell 2000, we are above that 200-day moving average again. Big day on Friday as we closed out. By the way, think about this. When we usually have a long extended weekend, usually we see a little bit of a sell-off on Friday afternoon. We didn't see that at all last Friday, so quite a bullish day for the market as markets got ready for Memorial Day. All right, well, let's take a look at the VIX, and as we would expect, there's our VIX down at lows as the market exploded, and doesn't seem to be a whole lot of fear taking place in the market at this time. 11.36, the longest we've had, and the lowest move in the VIX we've had for the last 3 months. Again, when we see these extremes, it's time for the market to reverse. So what we've seen take place in the market as we've looked at the last few months is we have a small gain, we end up with a new high. We're talking about the S&P, of course, and then we have a pullback to lower levels as the market just continues this very, very slow uprising, being fed by the Fed, of course. Don't fight the Fed, the rule I've said week after week, and you stick with that until the Fed changes what they're doing. What did the bond market do? Well, when we see the bond market definitely in an uptrend, as we see the bonds making a big rebound from where they were last year, and we see that we're coming up and a bit of a pullback for the week, but the bonds certainly are looking pretty healthy as we look towards the future in an upcycle in this uptrend, and we can expect that that might continue to pull up a little bit higher as the week goes on, giving us higher lows and higher highs. There's a low, there's a high, there's a low, there's a higher high, there's a higher low, higher high, and that continues until it stops. How long will it continue? Well, that's difficult to say, but the trend stays until it does change, and that's your current trend. All right, looking at gold, we see gold going absolutely nowhere, and absolutely no run to safety whatsoever. Gold going sideways and showing little growth and a little movement. There's our spider. We see that our lowest day of volume was on Friday as we reached that new high. So not showing us a great kind of strength on that breakout to new highs. So like I said, what happens is we get these new highs and then we have a pullback to some kind of moving average or a little bit below the moving average. With S&P showing us very little volume on the breakout. Okay, now let's go ahead and take a look at some of our other ETFs, see what some of the other sectors did. Looking at XLF, which is our financial fund, we see that this is, again, is a lower high, lagging the S&P, but certainly showing us a nice sideways trend as this looks like a typical rolling stock. And for those of you that like rolling stocks, this is when you might think about selling your call against the stock that you own. Looking at oil, we look at oil and we see oil popped up, and as we come into summer, no big surprise, it typically does this as they capture the vacation people. And with the thought that some of you are gold members, please stick around as we'll go into our stocks to watch. For those of you that are not gold members who would like to see more free videos from Options University, go to www.optionsuniversity.com/free gold. So with that thought, this is a market forecast brought to you by Options University. This is Butch Shorak, and it's Monday, May 27th, 2014, and thank you so much for being here.